start with the recommendations. So as Sir said, this is our Diwali pick, which we will review after a year. So first is SBI. Current market price is 880. And we will be giving a first target of 1070. It is the largest public sector bank. Their CASA ratio is around 42%. So CASA ratio is current account savings account ratio. So having a higher CASA base is very helpful for the bank. That means that their net interest margin, which is one of the most important fundamental factors that we look at, has very good scope. Apart from that, as we have repeatedly said, this year there was a 50 basis point cut for repo rate, 100 basis point cut for CRR. So this is very bullish for most of the banks, particularly PSU banks. Last 1 month we are seeing a very good momentum, which we did not really see for the past 1 year. Apart from this, in 2020, SBI bought around 25% stake in S Bank for around for over 4,000 crores. They have partially exited the stake for around 13 to 15%. They have exited recently for around 8,000 crores. So this is also extra income for them. Apart from that, their investment gains are also very good. So looking forward, recently we had a rate cut meeting. So that time there was no rate cut announced, but the governor mentioned that there could be a possibility of one more rate cut. It might happen in maybe by next year beginning. We'll have to see. So this is again very good for the banks. But one thing to notice is, this GST rate cuts and all these things have come. That is mainly more bullish for NBFCs, not banks as such. NBFCs like Bajaj Finance, they are completely into consumer finance. So it is more bullish for them. But this rate cut and CRR cut is very beneficial for the banks as well. We are waiting for the Q2 result. So far, all the provisional numbers that have come for few banks are very good. So we're expecting them to have good result as well. We are expecting them to do very well over the next 1 year. And also looking at their price to book value compared to HDFC and ICICI, they are cheap. So compared to both of them right now, valuation wise also HDFC is very cheap. Sorry, SBI is very cheap. Next we have L&T. It is a conglomerate. They are mainly into engineering, procurement, construction. They are into high-tech manufacturing, defense. So they are one of the largest companies in our country. They have many listed subsidiaries like L&T Tech, L&T Mindtree, which is their IT subsidiary, L&T Finance. So when these companies do well, they are also getting very stable dividends from them. Even value appreciation is seen on their balance sheet. Speaking about the company, see, last year government spending was low. It is picking up very well. So accordingly, their order book, we will see a change as well. The company's last year top line revenue was 2.5 lakh crores. If you look at their current order book right now, it is around 6 lakh crores. So that means they are in a very good, healthy position, order book wise. Even the company is a very strong company. Basically, construction companies, they are low margin, high volume business models. So we are expecting them to do well as well. Recently, they also got high orders from Saudi Arabia. Around 30% of their revenue exposure is towards Middle East. And they also acquired a company called E2E Networks for around 2,000 crores. My number may be a little wrong. They've acquired around 20% stake. So this is a AI cloud-based infra company. And we are also hearing news that L&T is going to soon get into data center and semiconductor business as well. And one advantage of L&T is, even if the market is bullish or bearish, they are a very stable company to have in the portfolio. They are very stable. Even in spite of tariff problems and all that, L&T won't correct that much as heavily as others. That is one advantage. And the company is also very strong, very fundamentally. Next we have Lupin. Current market price 1,959. First target is 2,380. It is a pharma company. So as most of you have known, we recently had a pharma tariff issue from the US. When the news came out, most of the pharma index was hit almost 2.5% that day itself. And then most of the pharma stocks have started going down. One thing to note about the pharma tariffs is, see, when you look at pharma companies, there are branded companies, generic companies, API companies. Branded companies means they have produced their own new drug and they're selling it at a high margin. Generic is the duplicate model, and APIs are the ingredients which are required for producing pharma products. So Lupin is mainly a generic company. So this tariff right now that have been introduced is not for generics; it is for branded drugs. So because of that, they will not be hurt that much, and it does not make sense for US to push a new tariff on generics because it would really destroy their market. So that way, we are not very worried. Their generic of their total revenue, around 70% exposure is towards generics, and we are expecting the company to do very well this year. Last quarter, their numbers were, I think, almost their all-time high numbers. We're expecting that to continue this year as well. This issue is there from the US. That one risk is there. That is something we'll have to look to, because if pharma industry is hit, even naturally, even the lupin will also go down. But what we have seen is for the numbers it gave last 2 quarters, the stock has really not moved up that much. And apart from that, they also have exposure to Europe as well. They are pushing heavily to expand in Europe as well. So from the last con call, what we understood is the company is not just looking to have a strong base in US. They are trying to push to the rest of the world as well. Next, we have Sensatech. Current market price is 798. First target is 980. We gave this company as our recommendation for during last meeting as well. It is right after the meeting that the H1B news had come, and then all the IT stocks got hit. But again, no, it was the month before that. So why Sensatech again is because we still believe that the company is very strong. They are a mid-cap company. See, unlike Infosys and TCS, they are huge players. So their opportunity or the potential for revenue growth is comparatively low compared to a mid-cap company. So because of that, even though they have 60% exposure to the US, that risk is always there. Even right now, the order book inflow from US is low. So we are not expecting very good coming quarter. But over the next 1 year, we are expecting company to do well. They are backed by RPG Group. They have a strong management. Even the company's fundamentals is very good. Finally, we have Precision Wire. Current market price is 216. First target is 280. Precision Wire and SBI, we recently gave us our monthly conviction pick as well. Precision Wire is one of the largest manufacturers of copper winding wires. So these are mainly used in consumer durables and other electronics as well. The company's current capacity is around 45,000 metric ton. And right now they are setting up a recycling plant in Gujarat, copper recycling plant. So with this, we are expecting their capacity to improve to almost 65,000 metric tons totally. So they also have exports of around 15%, and we are expecting that to improve. Setting up a new copper recycling plant, meaning their raw material dependency on outsiders will decrease. So this should improve their margins. Apart from that, the company is also very good at hedging prices. So copper prices have been going a little high, and we're expecting it to go higher. But the company is very good at hedging it, so that won't be an issue. Now coming towards last year's review, Nifty gave a return of 3%. It's not 7%. We'll correct it. Our recommendations gave a return of 7%. Speaking of Infosys and Star Health, Infosys, most of you know, last 2-3 quarters was very bad, very flat results, very flat top line and bottom line. So there has been no particular news. Then especially when this H1B news came, they were hit even worse. So we'll have to see regarding Infosys. Now they're doing buyback, but irrespective of that, for the numbers to change, orders have to come. So that we are looking a close check on all the top line IT companies. We will update you in coming meetings. Coming to Star Health, this is a different case. So last year we have seen medical inflation. So this is one of the reasons why all the hospital stocks have been going up. But if you look at life insurance companies, they have been going down, mainly because Star Health, for all the claims that they have to give, they're not able to. So the company is almost going towards a no gain phase. So even this year's quarter is something we are seeing. Even this rate cut on health insurance, we don't see it as a positive for the company. It's good for us, but for the company, it is not really positive. And Star Health also, we are looking at it. We'll update you in coming meetings if there's any update on the sector as such. Sharda Cropchem is one company that did really well. We have been consistently saying that raw material prices are improving, especially since last 1.5 years. So the company, it's a agrochemical company, and they've done very well. Avanti Feeds again. It was one of our top picks last year. They've achieved almost, they went to almost 700, and yesterday's close was around 644. Till this new tariff news coming, the stock did really well. And even last year, the soya dog price, which is one of the raw materials, they were very cheap. So again, now this quarter they might give good result, but after that we are not really sure. We'll have to wait and see. And again, the last Centum Electronics, since they are a defense company, they have been growing very well last year. Just for everyone's notice, we'll have a special Muhurat trading on 21st from 1:30 to 2:45. Thank you.